All right, guys, welcome to this station. This video has been on demand. People have been asking me to make a video on fair value gaps, right? So, that's what I thought to do today, right? So, today will be about fair value gaps. All right, to be about fair value gaps. All right, so now, before we go into details about what the fair value gap is, you have to understand that fair value gaps actually has so many names, right? So fair value gap has so many names. So you can call it, many people call it different names, and sometimes it's due to the naming, it has a different or slightly different function, right? So you have what we call the fair value gap, right? That is the first name that many people call fair value gap. Some people call it the imbalance, some people call it the IPA, some people call it the BC, that is bullish buy side imbalance, sell side inefficiency. Some people call it CB, so that is sell side imbalance, buy side inefficiency. All right. Some people call it inverted fair value gap, right? IFVG. All right. So these are all the names that refers to imbalances, right? Some people call it all of all these things. Some people call it some people call it gap, liquidity void, all of those things. But these are the basic definitions of an imbalance, right? Or if an ICT fair value gap, right? So these are all of them, right? So I'll kind of I'll kind of touch on some of them to show the little difference in it. So basically a fair value gap is identified by a gap between two candles. That means when you see one-sided movement, right, this gap between this candle and this candle, right, what's referred to as a fair value gap, right? So fair value gap is typically what is this gap between this candle. That means between here and there, we had only what sellers, right? That means this market was only bearish between this candle and this candle. All right, that's also referred to as a fair value gap or an imbalance, right? So fair value gap and imbalances, these three things mean exactly the same thing. You see, the fair value gap, the imbalance, and the IPA, they all mean the same thing, right? But when we talk about these last three, they kind of have different implications, right? They have different implications. Okay, I remember one now. Let me quickly type that one in. We have what we call the BPR, the balanced price range. So I have a BPR as well. All right, so these are all kinds of imbalances. So these first three have are the same thing. So if we hear fair value gap, if we hear imbalance, if we hear IPA, they all mean the same thing, the same exact thing, nothing different, right? They all mean the same thing. Imbalance, fair value gap, imbalance. IPA simply means imbalanced price action or improper price action. Those are the meaning. The IPA is called imbalanced price action or improper price action. It's still the same thing with fair value gaps and imbalances, right? So now, when you now try to classify these imbalances based on the different types, they will now have what we call the BC, the CB, the IFG, and the balanced price range. BPR means balanced price range. All right. So now let's talk about. So now I've understood what an imbalance is the gap between the two candles. You can see another one here. You can see another gap here. See this one here. So it's between this candle, right? Between that candle. So um my trading view is difficult to place. Look at that. Let me try to withdraw that. Sorry. I'm trading become so difficult to place your two. Right. So guys, so you can see the difference between this candle and this candle. That's what we call it a fair value gap, right? So now let us understand something. Now, when you're trying to classify fair value gaps, right, based on the bullish and bearish fair value gap, right? We now have the BC. So the BC is what simply what the bullish imbalance, right? Right, it's called the bullish one. And the meaning is buy side imbalance, sell side of inefficient, buy side imbalance, right? This is the meaning. Sell side inefficiency. Right, inefficiency is what it means. So just know that it's bullish. Buy side imbalance, sell side efficiency. But just to make it easy, this is what is bullish. So the buy side imbalance is what the bullish imbalance, right? So this is an example of a BC. So a BC is what this bullish one. So when the market breaks upwards, when the market comes back into the BC, so this BC is the bullish one. It acts as a support to send price upward. So you can refer to a BC as a bullish imbalance, right? You can refer to a BC as a bullish imbalance. So it is used for bullish movement. I mean, the market comes to hit the BC and then go higher. So that's what we refer as a BC. And note this, an imbalance can be used several times. It's not only the first touch. Market can come to an imbalance and move away and still come back again. Like look what happens. If you extend this to the future, imbalance can be used several times, right? It can be used several times, not just once. So if you extend this to the future, why is it doing that? So I'm going to extend that to the future. Sorry. My trading view can be so annoying. I don't just want to click. So you want it to click. Right. So you can see that if you extend this to the future, you can see that the trading the can see that the imbalance still reacted again. Right. So imbalances can be used several times. Market can come back to imbalance the first time, go and come back again. So imbalances can be used severally, right? Especially on the higher time frame. So you can see this imbalance, this BC, right? You can see how many times it held. And that's it came back, kept coming back. And that was called a BC. All right, that's a BC. Right. So for a CB is simply what the other one. So a CB is bearish. So a CB is bearish, right? If I'm not mistaken. So a CB is bearish. So that means it is like this one now. You expect the market to come back to a CB and sell off. That means you see a CB looking like the market should come back to a CB and then sell off. Also expect so the market should come to a CB and then sell off. For now, this imbalance is not yet complete because this candle has not closed. But once this candle closes, then we have our imbalance, our CB. But the CB is forming now, so you can expect market to come back to the CB and then drop. Right. So CB is used for what? Bearish what? It's used for bearish imbalances. Right. So that is different. That is it. So if CB is bearish, but it's used for sales, why a BC is bullish and used for what? Buys. Right. So now let us look at the IFG. So the IFG is simply inverted fair value gap. That means IFG is saying that when the market breaks a BC, it becomes a CB. What do I mean? I mean that a I mean that when the market is able to break a a BC or a buy side imbalance, the market is able to break a buy side imbalance or that is a BC, right? It tends to become a CB, right? So what do I mean? Now, let's look for a good example of what I mean. Let me look for a good example of this. All right, so this is what I mean. Now, look at this candle very carefully. Watch this. As the markets broke downwards, right? As the market broke downwards, what did we have here? We had what? Between this candle, right? Between this candle, trying to get step points, right? Right. This is our imbalance now. So, know something. To mark an imbalance correctly, you must always use the highest candle. The reason I'm not using this candle is because this is not the highest candle, right? For imbalance, you must use the highest candle to mark the imbalance. The law of the highest candle, not the because this is an inside candle. So the imbalance is between this highest candle and that one. So you don't use this one because this candle is inside this other one. So to mark an imbalance correctly, you use the highest candle. right? This candle that has the highest one we use. Don't use this one because this is inside this one. So we want to be using the extreme candle for the imbalance, and then this one to use the extreme candle for the low. So I'm using this because this candle is inside this. So this candle is not significant. It's an inside back candle, right? So the imbalance is between this low and this low. That's how to make an imbalance correct. Now, watch something. Watch that. This was a bearish imbalance, right? This was a bearish imbalance. Watch something. Watch that. As the market was able to break through, what happened? That imbalance became what? Is support. You can see that this was initially a bearish imbalance. You can see as price came here, you can see this reaction, right? This first and second reaction. But what happened? As the market was able to break through, it became what? An inverted fair value gap. That means it changed from being bearish to become bullish. That means an imbalance acts as a flip zone. When it is broken, it can change from being bearish to being bullish, right? So imbalances can become bullish and they can become bearish, right? So this was a bearish imbalance, but as the market broke through, it still came back there to do what? To buy off. So an imbalance can be used as a support. That means if the market breaks an imbalance, if you have a fair value gap or an imbalance, a market is able to break it, right? It can now change and become what? Bullish. So if maybe you had a bearish imbalance now, right? And the market is able to, I had this imbalance here, and the market is able to do what? What is this thing? Okay. And the market is able to break through, right? And the market is able to break through the imbalance, right? That imbalance now becomes what? A bullish one, right? Becomes bullish. So if the market is able to break through the imbalance, right? The market is able to break through the imbalance, it can bounce off it and then go higher. That's what I mean. So imbalances can become inverted. So this is referred as an inverted fair value gap. Inverted in the sense that it becomes support. A resistance level becomes a support level. So you can see that was resistance and support. So the imbalance broke from being bearish and then became what? Bullish. So that's what we mean. So imbalances can change intent when it is broken, especially on the higher time frame. Right? You use that also. So imbalances are both bearish and bullish, and they can be used as inverted. So when the market breaks an imbalance on the higher time frame, you can expect market to do or to bounce off it again for a further movement, right? So that's what I mean. So let's look at the last one, which is what? The balance price range. So the balance price range is simply an imbalance that is that is at the left and the right of the chart. So what do I mean? Let me take this off now. If you look very carefully here, you can see that there was an imbalance here. Watch this. There's an imbalance here in between here. Can you see this? So you can see that this imbalance was here and also overlapped with what? Another imbalance at the right. So those refer as a balance price range. When you see two imbalances at a particular zone, you refer that as what a balance price range. You can see that the imbalance was at the left and then to the right. So we refer that as what's called a balance price range. And usually, I like to see when they're very, very symmetrical. And this one's not really, really symmetrical. I can see that it did not really overlap very well. But when you see the imbalance overlap very well, we refer to that as what a balance price range. So balance price range also acts the same. If it breaks and goes up, it now becomes what bullish, right? When it is below, it becomes bearish. So the same thing, it was bearish here. When the market is broke and now made an imbalance, it's supposed to fail as a balance price range. So balance price range is an imbalance inside a previous imbalance, right? So when you see the market create an imbalance inside a previous imbalance, we refer to that as what balance price range, right? You can see it all over your chart, right? So balance price range are very beautiful if you can spot them on the market. They are balance, what you call balance price range. But you see balance form at the left and then to the right. And we refer to that as what we call balance price range, right? Look at the very clear example of the balance price range. Look at the very clear example of balance price range here. Watch this. You can see this imbalance to the left, right? You can see this imbalance on the left of this chart, and then to the right. So you can see this imbalance very clear. I can see the imbalance you can see it from the left of this chart and then to the right. So we had a balance price range here, where you can see the imbalance at the left side and then at the right side as well. So we had an imbalance at the right and then an imbalance to the left. So we call this a balance price range. You can see how the markets reacted nicely. The markets came there. So watch this. Can you see this? So we had this imbalance that started at the left here. You can see it started at the left here and then it's made another imbalance at the right. So we had an imbalance between here can see how these things occur. Very beautiful setups. You can find them in the chat, right? So, and so that's the imbalance, right? So you can see imbalance by the left and the right. So it was referred as a balanced price rate. You can see it left and right. So referred as a balanced price rate. So you can see market will react to those levels. So those are the kind of imbalances we have. Liquidity voids are also there, but I won't talk about liquidity void. Now we'll talk about liquidity void in our paid mentorship, right? I won't talk about liquidity void because it's taking a lot of time, right? So now we have understood what an imbalances. We have understood the kinds of imbalances. So tomorrow we'll be talking about how to use imbalances for entries, right? Tomorrow will be deeper study into imbalances and other blocks, right? So we're going to go more deep into imbalances and other blocks tomorrow, right? But for today, just identify imbalances, the kinds of imbalances. Then tomorrow, we're talking about deeper studies on imbalance and other blocks, right? That's what tomorrow will be about. People to that look at higher time frame imbalance, lower time frame imbalance, how to look for entries, and don't forget that our prop firm blueprints is still out at a 50% discount, right? So the prop firm blueprint is still available. Prop firm blueprints is actually a course that will help you to pass your prop firm account, and it is a one-time payment. You will have access to it for life, right? So use the link in the description to get your prop firm blueprint. It's just 5,000 on the first of this month. It becomes 10. It's going to double on the first of this month. So you can just get your blueprint with the link in the description. Get your prop firm blueprint with the link in the description, right? So get your prop firm blueprint with the link in the description, right? So the link will be there. You can just click on it and get your blueprint. So tomorrow we're going deeper into imbalance and other blocks, deeper studies. I don't want this course to be so long so that those people that have little time span can go to it. So have a wonderful day. Cheers.